One of the most important negative news in 2016 perhaps was given last Friday by OPEC. All doors and windows are open. All members should produce as much oil as they want. Just throw it on the street. Let's hope something sticks. And that was what the OPEC decided. And folks just went for the weekend, digested it, and came back on Monday, and it was all hell let loose. Let's bring in Ada Konobi from financial derivatives. She's an economist and a research analyst. Good morning.
Good morning.
Thank you. This looks a really bad time for analysts and investors in oil. It looks like this is not a nice way to end the year, not from OPEC.
Yes, it is a bad time for the energy sector generally. Oil prices have reached a 7-year low, mainly because of the OPEC meeting that was held on Friday in Vienna. It was not a surprise to most analysts because they believe that the way it is, Saudi Arabia wants to still dominate the market, and they've removed the cap on their production, and this is the first time in their communique that they haven't put any specific number as to how much oil they're looking to produce. So they said they're going to produce oil, they're going to continue production at the current level, which is approximately 31.7 million barrels. There's no addition, there's no subtraction, and this is with the exclusion of Indonesia and Iran adding additional barrels into the market. So this sent negative shocks all over the world as to how worse or how bad could this global supply glut deepen, and productions are going to skyrocket, inventories are filling up, so it's really a bad time for most energy stocks.
The last 48 hours, talk to us about what the situation had been for you analysts watching this scenario.
Well, there's been a lot of volatility in prices. So if you're looking at it from the supply side and you're looking at it from the demand side, in the supply side, there's generally oversupply of about 3 million barrels. Iraq is increasing production. Saudi Arabia is increasing production as well. Russia is increasing production. Although the U.S. production is decreasing, I mean, it's still higher than levels seen at last year. And the EIA projects that U.S. production in 2016 will actually drop by 600,000 barrels. So, I mean, why would Saudi Arabia change their policy if they see that the means of trying to push out high-cost producers is actually working? So they're looking to see who is going to stay in the game the longest. And seeing that they produce oil, seen as one of the top 3 producers of oil, I mean, it cost them about $9.90 to produce a barrel of oil. Kuwait, it cost them about $8.50 to produce a barrel of oil, and oil prices now about $40, $41. I mean, they are suffering quite well. They're already eating into their savings. They're already running on a budget deficits, but because they are really efficient producers, they can actually stay in this game the longest. But then the IMF has said if this carries on for 5 years, I mean, it's going to actually affect Saudi Arabia inclusive.
It's going to be a lot of problems. Look at where we started the year. 27.81% negative for the Brent. WTI, 28.54% negative. Natural gas, massive minus 31.33%. Corn, 5.75, wheat, 16.95, raw rice, 5.81. How worse can it get? Who else is making money here? It all looks like it's all hell let loose. Look at the screen there. And look at the screen. You folks prepared this, but it's all red.
It is.
So it looks like, this doesn't look like Blue Christmas.
No, well,
like a negative one.
No, for the rest of the year, we probably will see a weak performance in commodity prices, except cocoa, actually, which is obviously taking high because of the supply constraint. But then, if you look at the energy sector as well, the demand is not doing too well. We know that
just to talk about China, the industrial data is not coming out too well. Germany isn't coming in anytime too well. France is struggling in there. Yes. They're just hanging in there somehow. Not really good. Italy is not looking good. U.S. had some new jobs data.
Yes.
That looks a little bit better before the December 15-16 decision by Janet Yellen, the
yes.
U.S. Fed chairman. From the buyer side of the energy market, do you think there's any silver lining somewhere?
From the buyer side, well, for now, going into 2016, I'm sure most buyers will take advantage of very low prices. For example, and stockpile too. For example, now China is actually buying oil, and the export for November actually increased compared year on year because they're taking advantage of low oil prices. So they actually filling up their strategic reserves. So yes, demand is actually, picking up slightly, but then generally there's just that negative sentiment that the overall demand from China is actually slowing down. We know that their manufacturing and PMI actually performed the lowest in years, and we know that their export figures fell year on year, their import figures fell year on year, and and generally the demand for oil from China will actually slow as they're trying to restructure their economy. So if they're shifting their economy, it will only make sense that they don't actually import or buy as much oil as they used to. And then we move into the US as well. That's for the demand side. But then the US job data came out last week, and they added about 211,000 jobs. There was a gain in the job sector higher than 200,000
figure around 5%.
Exactly. Unemployment figures are still around 5% from a decade ago. So most people believe that the US economy is actually doing well. So this is giving them more grounds to actually increase interest rate in the next meeting.
Perhaps these were the stories behind the curtain or under the table for Saudi Arabia to say, look, there is no restriction on production, just keep flooding the market. Somehow things will gain traction. Nigeria is now targeting 2.2 million barrels per day for next year.
Yes.
According to the budget yesterday, we're doing our benchmark at 38. You think those are wise decisions? Let's start with the figure, $38 a barrel. You think that's really good figure to go with?
To be honest, the prices now are $40, $41. I feel that prices, the benchmark for 2016 should be revised a little lower to probably $35 per barrel, because you don't want that volatility in prices. And at the end of the day, how much profit would you make, the gap between the budget and...
So you think right now we're close to the edge. 40.73 yesterday. If anything happen between now and December, we'll go down to 38. WTI is already down at, NAMEX is already down at 37.65.
There's a probability oil prices will go lower if the Fed conclude their meeting next week, December 15, December 16, and if they indeed increase interest rate. They haven't increased interest rate since the last
6 years,
about a decade ago.
Yeah,
so they're looking to increase interest rate by about 0.25%. Exactly. So if that happens, that will put pressure on the demand for domestic commodities, because the dollar will strengthen really, really well. So that is something to look forward to. Then Iran coming into the market.
January next year, first quarter?
First quarter at the most, February. Iran is actually looking to come into the market most quicker than analysts expected, because survival. Exactly.
No, the Iranians are hungry.
It is survival of the fittest.
You can imagine the ISIS, the insurgents selling oil at their own backyard.
Exactly.
And they're not getting in that game.
Exactly.
Even at $40 a barrel is just free money for the ISIS and those terrorists there. So Iran just want to get quickly back into production as fast as possible before perhaps oil gets to 10.
Yeah, exactly. And there's a parliamentary meeting coming up as well in February. So they're looking to see if they can quickly conclude on that so they can come back into the market. And we know that they're having a meeting in London to review contracts February as well. So these are all what most analysts are looking at to show that actually Iran will come into the market most quicker than analysts expected.
Third quarter, let's talk about Nigeria a little bit for about a minute before we wrap up. We did about 1.2 million barrels in the third quarter.
Yes.
Oil production. Now we're looking at 2.2 million barrels in 2016. Is that realistic?
Well, the top people in the government said it is actually realistic. So I'm assuming that they're going to go back to the drawing board and try and do a lot of restructuring, trying to sink in what is happening right now, and it only makes sense if you ramp up production next year to fight for market share. You can't continue to produce at low levels. If everyone is increasing production...
Join the game.
Exactly, you join the game to get some sort of revenue into the country. So it is possible. It is possible.
So if you can't beat them,
join them.
Just join them. Thank you. Thanks for joining us.
Thank you so much. Thanks for having me.
I'm not sure you can beat us, but okay. That's all right. You can always join us.
Thank
you. Economist and research analyst at Financial Derivatives, come to talk in commodities this morning. We'll be back after the break. We have a lot to talk about.